How's it going, everyone? My name is Derek Afasi, and today's topic I want to discuss with you how much is term life insurance, and I'm going to show you a little technique on how you could save thousands upon thousands of dollars while just utilizing term life insurance to match up specifically to your goal. Now understand, there's some specialists out there, people that they call themselves financial gurus, that try to say buy term, invest the difference. I'm not all for that. I'm more for whatever your goals permit, that's what you should do. So it's pretty simple. Basically, if someone's interested in permanent life insurance, make sure that there's a portion, set aside for permanent life insurance, and you're doing that in the most cost-efficient manner. Term life insurance is very necessary, though, and you could save thousands of dollars as opposed to going into a permanent life insurance plan, for thousands upon thousands of dollars. What do I mean by that? Well, if you go and you have a life insurance goal, and we understand it's $1 million. But out of that, you only want $200,000 that is covering a permanent life insurance plan or a permanent life insurance goal. Well, there's no need to have $1 million of permanent life insurance. It just doesn't make any sense. But how exactly can we uncover this other $800,000? How can we make sure that those short-term goals are at least protecting an individual? Now, what I'm talking about is a process known as a laddering strategy that you could set up and make sure that your goals are being met. One of the things that I always do whenever, or I've at least educated my advisors on, is when someone calls into the office and they say, okay, listen, I'm interested in term life insurance, I'm interested in life insurance, I have specific goals, but I don't really know how much I need, I don't really know what company's good, what company's bad, etc. How exactly can I determine my number? And I go through something known as the DIME theory. It's just like the coin, D-I-M-E. The D stands for debt. Maybe somebody has a short-term debt. Maybe somebody understands that, they have credit card debt or they have a student loan debt, and that's going to be paid off in about 20 years. The I stands for income. Maybe they understand that, they're 30 years old and they're going to be working until age 60, and that's when they want to retire, is at age 60. But in the interim, they want to make sure that they at least have death benefit protection. If they pass away before age 60, that their spouse is covered, that their children are covered, as if they're providing income from the grave. So based upon that income goal, let's say if someone's making $50,000 in a given year, and they want to make sure that at least, if they pass away prematurely, that at least 10 years worth of their income would get paid out to their beneficiaries in a tax-free manner. So that would be 50,000 multiplied by 10, which is $500,000, right? Let's say that this student loan debt of 20 years was $100,000. Mortgage. Let's say someone has a mortgage, and if you purchase a home, you're probably getting bombarded with these letters, and it says, oh, make sure that you have mortgage protection. The only thing, mortgage protection it's just a life insurance plan that whatever bank or institution that you went through, they basically sold those leads to an insurance company or insurance agent that is now marketing your address. And they say, oh, this person just purchased the home. We understand they have a $200,000 mortgage. So now we're going to make this official letter. We're going to send it over to a client, and we're going to say, hey, listen, you need to make sure that you guys at least have protection on your mortgage. All it is just a life insurance plan. So when you go through all the nuts and bolts, you're going to understand if you have a 30-year mortgage for $200,000, it's going to be a life insurance plan for 30 years for exactly $200,000. So let's say if we uncover that and somebody has a mortgage for $200,000, and that's going to be paid off within 30 years. Well, there's different ways you could actually utilize laddering strategies on this process. And let me kind of uncover all these different needs first, and then I'll go through how to set up a laddering strategy, making sure that you're paying the cheapest amount of dollars possible for term life insurance. So we understand that mortgage is a $200,000 30-year mortgage. The last thing might be education. Maybe you have some children and you want to make sure that maybe they're 5 years old or right around 5 years old, and you want to make sure that, God forbid, something happens to you before they're the age of 25, that you would be able to provide for their college or their private school, in the interim. So maybe that would require, if they're 5 years old right now and you want to make sure that they're at least covered until they're age 25, that would require a 20-year term policy, right? And maybe you might have a couple of kids, so you might say, okay, this is based upon 3 different children, and I want to make sure at least $100,000 is covered for each child. So now we have a $300,000 goal. So now when we start adding this up, we're like, wow, this is actually a lot of money. This looks very expensive. And if you set it up the wrong way, yes, it will be expensive. But if you do it on a very safe, methodical process, you could save thousands upon thousands of dollars. What do I mean by that? Well, if we understand that you have a debt that's going to be there for at least 20 years, then you understand that you should at least have a $100,000 20-year term plan. Income. We understand that the person might be age 30 right now and they want to at least make sure that income, that $50,000 is coming to their beneficiaries for 10 years or maybe for 5 years, so that'll be a $250,000 goal, whatever that is. In this scenario, you want to at least make sure for 30 years you have that income protection and you could leave at least an income stream to your beneficiaries, God forbid if you pass away within 30 years. So that's $500,000 30-year plan. The mortgage, we understand. We have a $200,000 30-year mortgage. So we want to at least make sure that another coverage is for at least $200,000 for up to 30 years. This mortgage goal can be dealt with a laddering strategy. You could have a plan that you do not need a $200,000 30-year mortgage, 30-year policy. You could actually splice it up into a $100,000 15-year plan and a $100,000 30-year plan. And what that does is right off the gate, right off the bat, it gives you $200,000 of mortgage protection. But after 15 years, you don't have to overpay for your life insurance if your mortgage is already cut in half in 15 years. So therefore, your $100,000 15-year plan would fall off, and then you'd only have another $100,000 30-year plan left. On the education factor, you need to at least make sure 3 kids, $100,000 per kid is only covered for 20 years. So now when we're putting together this formula, maybe you need $300,000 for 20 years, $100,000 for 20 years, which would be a $400,000 20-year term plan. You have the income, which would be a $500,000 30-year term plan, plus the other $100,000 30-year term plan from the mortgage, which would be $600,000 of the 30-year term plan. And then you have $100,000 for the 15-year term plan. And what we're doing is, rather than saying, okay, you need exactly $1.1 million, rather than say, let's purchase a 30-year term policy for $1.1 million, it's not going to correlate to your goals. With doing it this route, you're going to save hundreds upon thousands of dollars in the process. Reason being is because after 15 years, you're no longer paying for that $100,000 15-year term policy. That falls off. After 20 years, you're no longer paying for the $400,000 20-year term policy because that need fell off. And now you're only stuck with the $600,000 left, which would cover for your income goal and the remaining mortgage goal for $600,000. After that 30 years is done, then you don't have any more life insurance to pay for. But in this scenario, what a lot of advisors do is they'll try to convince you to say, oh, you need $1.1 million of permanent life insurance because that's what's going to give them the highest commissions. But if your goals only permit for term life insurance and you only have those specific goals, kind of like similar to this example, well, what we're doing is we're paying for life insurance. We're making sure that we are giving you the best coverage possible and you're not overpaying for this plan. I mean, it's always good to be insurance rich, but you want to make sure that you're correlating precisely to your goal and you're never going a dollar more or a dollar less than what your goals should permit to. One of the things I always recommend is you give our 1-800 number a call. We have an entire department designed for life insurance planning. When you call in, you'll be dealing with a specialist. We'll ask you a slew of questions. We'll say, hey, listen, based upon your term life insurance goal or your life insurance goal, what exactly is it? Is this important to you? Is this not important to you? Because if it's not important, then you should not have that you shouldn't be overpaying for life insurance. But there are some very necessary goals. I definitely believe in life insurance. Unfortunately, I've had a lot of death claims that I've had to pay out throughout the years. And it's, this is why we go through our due diligence and we go through a very methodical process, making sure that you're comfortable. And then on top of it, we're an independent agency. So depending upon your area, which state you're calling in, and based upon if you're a smoker, non-smoker, if you've had other ailments, we go through over 300 different carriers and multiple strategies and product lines that on average we go over 1,200 different scenarios per individual that calls us up to say, okay, listen, this is option A. This might be the best route with company XYZ. might give you really good on 30-year term, but then company ABC might be very good on the 20-year term, and you don't have to go into one company and one type of life insurance plan. You could have 3 different types of life insurance plans. You could have 5 different types of life insurance plans. So at the end of the day, that you are, using the smallest amount of dollars possible to produce that most optimal result. We are A+ rated on the Better Business Bureau. We've always had very good reviews. We've never had any complaints. That's because it's a methodical process. The process that I'm talking about is something known as the Retire Sharp Planning System. The name of our website is retiresharp.com. At any point in time, if you find this interesting, please give our 1-800 number a call. We offer 24/7 customer service where we'll be dealing with, you give us a call and you say, hey, listen, I'm interested in some different life insurance numbers and I want to, kind of really get my number down and really see exactly if I really do need life insurance or not. And I want to make sure that I'm being confident that this is going to be the most cost-efficient way on how to do it. We go through all A+ rated carriers, A-rated carriers, making sure that's a safe carrier. It's not a company that's a fly-by-night company, like something you received in the mail that says, 10 cents for life insurance. One of the other things that this is just basically to go on a rant is I see these commercials constantly and it says, Susie purchased life insurance, term life insurance for, less than $19 a month or less than $1 a day for $500,000 of life insurance. One thing you're always going to notice on those commercials is you're going to see 10-year term life insurance. They're always going to show you that number for the smallest amount. It's going to show you the highest rating for the smallest duration of time. Reason being is because they want you to obviously give them a call, but when push comes to shove, what is the odds that Susie, who's 30 years old, is going to pass away before 10 years? That's why the life insurance is so cheap. So understand that is not necessarily the route to go. You want to make sure that you're at least dealing with a specialist. And this is what myself and my company tries to provide to you guys on every step of the way. We want to make sure that you have a 20-year goal, you're accomplishing that, you're going through all the carriers, so that with pure confidence, this is exactly the best position for you. Please feel free to subscribe to our YouTube channel, Retire Sharp, so you have access to the most updated videos. We try to put together this content on a weekly basis, and when you subscribe, you will have access to some different topics, whether it's retirement rollovers or life insurance techniques on how to just make sure that you're controlling the chips at the end of the day. Thank you very much for watching this video. I look forward to either speaking with you, myself, or just give the 1-800 number a call, 1-800-566-1002, and I hope you learned something on this video. Thanks, guys.